Hello and welcome to the channel. This is going to be my first public YouTube video. For those of you who are not familiar, I have been doing public analysis for about 6 months now, or since January of this year. I started posting on Reddit and created a Discord server. I have basically spent the past 6 months of my life putting everything that I know about trading and a lot of what I know about life in general as well into the server. I have a lot of channels. There's a lot of things that you can come in here and read about. This is the welcome page, but essentially I do live commentary where every day I talk about what I'm seeing in the market and posting charts and things like that. I do analysis before and after each session and trade recaps and trade ideas and things like that. And this is all free, and this is mainly what I have been doing for the past 6 months. And the main reason that I've started was just to help people, because in 2023 I watched a lot of my friends get destroyed by shorting the market over and over and just losing because the mainstream media was hyping up the recession. We had the banking crisis in March of 23, and we had a lot of bearish sentiment, and of course there was no recession, and stocks just ripped to new all-time highs, and we're still seeing that rally continue today. So that was the main reason why I started, and it's free. I'm also doing a small account challenge, so this is going to remain free until the small account challenge is completed, and it might even stay free after. I'm really not totally sure yet. So have a nice little community here. I'm proud of what we've been able to create. So if you're interested, we would love to see you there to come hang out. So anyway, back to the purpose of this video, which was to talk about this market crash thesis that I've been talking about for the past about a month, really, since early June, before the last FOMC and CPI. I have flipped bearish, so it's kind of ironic. I started the public analysis being permeable, got a lot of criticism for that. People talking about all this bearish stuff and how we're going into a recession and all that, and just got a lot of criticism for being bullish at the time. And now at 6 months later, the market has skyrocketed, and now I'm bearish and getting a lot of criticism for being bearish. So it's interesting to see that retail sentiment has flipped from bearish to early in the year to bullish now, which I think is a pretty key indicator of what's to come next. But before I say anything, I should say that it's obviously extremely risky. I've already lost money shorting. I tried earlier like a few weeks ago and lost, and recently I've been loading shorts again, but I do have a lot of time. This time I'm buying some longer dated puts, but either way, I can't tell the future. It's extremely bullish. It's very dangerous to short. I don't typically try to pick tops or bottoms. I don't think it's smart, but I'm just seeing a lot of things that make me think this is the top, and I think this is a good opportunity to kind of prove that all my strategies and analysis works, and the ideas that I have are real, and they actually work. If I didn't believe this stuff, I would not be going to all this trouble. So I wanted to work out, but again, very bullish time of the year seasonally with July and August, obviously all-time high, huge rally. Shorting is not the smartest thing to do. So keep that in mind as well. This is a pretty long presentation. Don't expect everybody to read all of it, and I'm not going to go over it page by page, but this is here for anybody who is interested in sitting down and going through all of it. It just explains pretty much from start to finish what the overall thesis is. I talk a lot about kind of my general strategy and how I view the markets at first, and then talk about some of the main points, and share a bunch of charts on TradingView as well. So you can just click these and kind of go through and see. A lot of these I've posted since it's been a while. Some of these are new, but others have been you'll see when you go to the charts, they've already either been invalidated or they've already worked out. But that's just the nature of creating these charts. So there's a lot here. There's recession indicators, there's fractals, some other things, and then all the fundamentals and speculation. So just to kind of sum up the trade, the overall thesis. So outside of the technicals, which I won't even talk about, there's just too much. Which you can see it. But for the fundamental case, which again I don't normally put too much weight on, but it's all about the Fed and rate hikes and rate cut expectations from the market. We have CPI this week, so that'll be very important to see how the Fed funds futures react to that data, if it's hot or cold or in line. Overall, I think that the Fed will not be able to navigate a soft landing like so many seem to think. Mainstream media has recently gotten very bullish, talking about the soft landing, and the market's pricing in cuts in September now, which I think is a mistake. But we'll see. I don't buy the soft landing. I don't buy it at all, even though it did work. It has worked in the past, like 1995 is an example. I see a lot of people pointing to that. I personally think this is more like 2001 or 2008 rather than 1995. But there is, like I've said, I can't see the future. There is a big risk of a huge rally if you short. So keep that in mind. I think ultimately inflation is going to persist. Treasury yields are going to spike, which is going to cause a global currency crisis, essentially. I think it's going to start with the Japanese yen. We're already seeing it. The Japanese yen recently fell to levels below the against the US dollar that it hasn't fallen to since 1986, and it is continuing to fall. The Bank of Japan has been trying to prop it up. They've spent $62 billion so far. They've been selling US treasuries. It doesn't work. The yen just keeps going down. I think that they're just going to have to keep selling treasuries, and that's going to cause the yields to spike, and then the yen's going to keep going down, and stocks are going to go with it, and it's just kind of a death loop. They're kind of in a situation where I don't think they can really get out. They're going to have to keep selling treasuries, and that's not going to help their situation, and eventually it's going to collapse, which is going to cause a collapse on all the other currencies that are backed or that use the US dollar as the reserve currency. We're seeing a lot of countries already switching off the US dollar to trade oil with, which is a huge deal, I think. They're switching to crypto and gold as their reserve currencies and moving off of the US dollar, which I think eventually is going to lead to the collapse. The debt is just out of control. Credit rating agencies are getting fed up with it. The International Monetary Fund is warning about the US debt. It's growing by $1 trillion every 100 days or so. Here's that particular link. I put it here in this thesis, or maybe that's not the one, but there is one somewhere in here, I believe. Oh, maybe that's the wrong link, actually. I'll have to fix that. But anyway, hopefully, if you've seen any typos or anything, please let me know, by the way. This is a big document that I haven't been able to completely proofread. So yeah, that's just some of the stuff. There's a lot of speculation and stuff, but again, it mainly goes back to the technicals and the fact that I think I've been seeing a lot of distribution, and we have a lot of what I think are bearish charts. So that is kind of the gist of the thesis as a whole, but you can dive in and get the full details if you would like. So now I want to talk about some of the ideas themselves that are in the presentation. Like I said, I'll link the presentation. You can go through all the different charts and things in detail if you'd like, but I'm just going to cover some of the main ones here and talk about kind of what I'm expecting for this week and moving forward. So, and part of this reason is because I want to talk about, that while I do have this bearish bias and I think the market's going to crash, that doesn't mean that the market can't go up a day or two. It's obviously been doing nothing but go up the past few weeks. So, you've got to adapt and move with the market. Just because I'm bearish doesn't mean I can't play calls one day or 1 week, and I don't have to just be buying puts and losing all my money constantly. I can play both sides. I prefer to trade in the major direction of like my major bias of what I think the longer term thing is, which I mean recently that's been long, obviously, and probably still should be, but for now I'm turned a little bit bearish. But anyway, the point is, you got to trade both ways. And if a trade doesn't work, you stop out and you move on. You go to the next. You manage risk. It doesn't matter if you're bullish or bearish. If you have a bullish idea and you have a good plan, you have some confirmations for entering, you have a stop loss, you have a take profit target and all that stuff, and you lose money, you're not wrong. That you did everything right. You followed your plan. You developed a plan, and it didn't work. And that's how trading goes sometimes. So it's just kind of crazy to me how bullish retail is, and how I'm just getting these comments of these people just really trying to be rude. I mean, there's no other reason to even make the comments that they're making. Some people go out of their way to like DM me and try to make me feel even worse. It's just kind of bizarre that people get so angry and upset about me posting some short ideas and shorting, and it's talk about how I'm such an idiot, and how I'm losing money and all this, and it's like, yeah, well, I lost some money shorting before FOMC and CPI, but since then you should probably check my P&L before you say anything like that, because while yes, I've been trading against the grain and being short, I still find good opportunities to short, and I avoid the scary shorts, like such as Nvidia. You don't short Nvidia, you don't short the Mag 7, you stay away from tech stocks. There's a lot of weak stocks right now. We have some of the worst breadth I've ever seen in a rally like this. So the entire market is concentrated in like 10 stocks, and it's a lot of that is Nvidia. So that's another reason to think that this rally is not going to last. But for now, that you shouldn't be getting in front of a moving train, and you should be shorting the weaker names. So that's kind of what I've been doing, and just going to kind of show how I view these things, and go over some of these ideas. So Bitcoin is one of the most interesting ones. Wanted to start with this one. So I had this short target for Bitcoin here at this demand zone. This was around 52K to 50K. It almost got down there, got all the way below 54K, whatever day that was, Friday, and has just been super weak ever since. 71K here, making this little double top. I've been posting a bunch of ideas, basically been shorting this in coin all the way down. I don't trade Bitcoin directly, but I will short coin or other stocks that have options that I can trade by. I typically don't trade crypto directly, but it's, ever since it broke below the 61 area, and then it had the key 59K support as well, that it's now below and continuing to move below. So there was a bounce here before it hit demand, but ultimately I expect this to hit demand before bouncing. I'll look to take profit on coin puts in this area. If it just keeps going after this, I would be pretty concerned for bulls, but for now I do expect this area to bounce. So that's Bitcoin. TLT, so this is something with interest rates. These are 20-year treasury bond ETF. So if these are going up, that is not good for stocks. These have been in a downtrend since 2022. And if we play this out here, did get a bullish candle here off the bottom of this trend line, but it is yet to really prove itself that it's going to actually break out. We do have a breakout here, and then a shorter term one as well. So important to watch that one to see how interest rates and everything are doing. Coin, this is another one that I've been shorting a lot since Bitcoin kind of double topped at 71K. So currently it did break below this key support at 221, but has kind of reclaimed, went back for a retest of 235, and then had a huge gap down, and then came back for a retest at 221, and then also retested this wedge that it was trading in. So we'll see. Based on what's happening with Bitcoin right now, it looks like coin's going to gap down again. Final target for coin is 190, maybe 200. I do have puts on this. Going to take profit at 200 and 190. We'll close the entire position if it hits. And this is PLTR. So very interested in PLTR. It's kind of like a meme stock. Don't like to trade it often. Has not been very tradable since the big run in 2021, but has been having a nice run lately, and it is at some very critical resistance. There's a huge supply zone that was created back here in November of 21 that led to a huge rejection on the first test back in March, and coming up for another test now. So we'll see what happens. It had a very strong close last week. It's at the very top end of the range. I think if this does break out, it could go all the way back to all-time high by the end of the year, really. I think this could be a huge mover. If we are going to rally this summer and this thing breaks out, I like this a lot. But I'm actually currently short. I shorted when it entered supply, so I'm going to stop out if it gaps above or stay in the position below. Probably target this 2027 area for the first target for that. So we'll see how that goes. Tesla, so this was a huge one. Had a huge breakout, broke this major downtrend that it's been in since November of 21. It bounced off this major uptrend line that it had been in since all the way back here in 2020, and just had a huge rocket since, and has now broken above this major trend line. This is a huge breakout. If this sustains, I expect it to keep going for quite some time. If this ends up being a huge fake out, then I would see that as quite bearish. So I'm going to be watching this trend line, looking for longs as long as it stays above, but I do want to see it cool off a little bit, because you can see went up almost 30% last week, so I'm not ready to trade it yet. Lulu, this is one of my favorite shorts. I like this short a lot because I think the retail sector is very weak. This has been selling off as of late due to Nike, but there's also been a major trend break that it has made as well. Had a big sell-off after the earnings earlier this year, and has had a little bit of a bounce, but basically just been straight down and broke below this major uptrend that it had been in since 2020. So this is, I see this as extremely bearish and expect it to continue down. We have stocks like Nike, Walgreens, Big Lots, I mean, lots of retailers just going out of business. I don't think Nike or Lulu is going to go out of business, but I do think there is going to be a pretty bearish market for these retail stores for the foreseeable future. So one of my favorite shorts here, an example of how you don't have to short these semiconductors. In Mag 7, you can find weak sectors and weak stocks to short. So this is the chart of the Japanese yen. I was talking about this earlier. So this is the actual chart. You can see back in 1986 here was the last time it made this high, around 160, or actually, sorry, this is the 1990s. This is the one from 86, and it has broken above that line. Finally, it's just, I see this as just getting started. I mean, this, it's been 20, 30 years since it's been here, and this trend line that it broke out above started back in 86 as well, and it broke to the upside in 2014 and has remained above ever since. And also recently had this bullish pennant that it also broke to the upside. So we're right on the edge here of either a big failure, or really this would be, it's reversed since it's the US dollar against the yen, but you get the point. If this chart goes up, the yen is going to be cooked. So that's very important watch for me moving forward to see how the Bank of Japan handles that. So another chart, NVIDIA, all eyes on NVIDIA. This is like a $3 trillion market cap. I don't know if it still has that, but when it was up here, it reached that. Anyway, competing with Apple and Microsoft for the most valuable company in the world, it's been one of the strongest stocks in the entire market all year, and really since late 23. So huge run. I think, semis, AI, all this stuff is what has pushed the market higher, and this is a big factor. So I think if this loses its steam and falls below this support at 118, we could see a lot of downside for the Nasdaq if Nvidia sees it as well. It's already broken below this major ascending wedge and has been moving down since, but basically going sideways for a while now. So another very important watch moving forward. And then DXY, this has a lot to do with treasury yields and the yen as well. We have this major downtrend breakout from the high in September of 22. It has sustained. Recently, it did have some weakness. It finally reclaimed this 105.50 area, but has weakened and fallen below after it failed to break these previous highs here. So part of the thesis does require DXY to be strong, so I would expect this to continue to be strong until it goes back below this trend line here. So weakness recently, but still a very strong uptrend, I would say. And then we go back to semis. So SOX is semiconductor ETF, all the semis, not just NVIDIA, and we can see that it had a major top here back in on June 20th was that, where it retested this major uptrend that it had been in and broken below here that caused this big sell-off, went back for a retest, huge rejection, is now sitting on the bottom of this trend that has been going up since the bottom in April. So we've already broken below the major trend from all the way back here, and now we're trying to break below this one. I think this will be really important moving forward. You can see that this bounced right off the line as you would expect, and it's potentially going to go back for an all-time high retest, and maybe even, this trend line is going to extend. It might hit it up here. We'll just have to see. So that's another very important watch. So yeah, that kind of, I think, is a lot of the main things that I'm going to be watching moving forward. I have a lot of other charts and ideas and things that I'll be posting. I think Bitcoin is very interesting right now. The sell-off is going to be interesting. We'll see how that goes. It had a kind of a megaphone wedge break to the downside and bounced briefly, but is all the way almost back to this previous low that it made very recently, and this is the demand zone that I showed earlier that I expected to hit as well. So yeah, that's Bitcoin. That's what we'll be watching. You can check my TradingView profile, or join the Discord, or just any of my socials if you want to stay up to date. But other than that, thanks for watching, and we'll see you in the next one.